The first meeting is really a get-to-know-you meeting. We're going to sit down. Typically, the meeting will last about an hour. We're having a conversation. My job is to ask them some questions about where they are, what some of their goals are, what some of the key objectives they have in meeting with me, where they are to this point, and really what brought them in to see me. And now I'm at the point in my career where I have a lot of people that are dependent upon me to provide them with all the guidance and all the advice that we do on a day-to-day basis.
You spend your working years trying to build up your assets, trying to build up pension credits at your job, trying to grow your nest egg so that you can one day retire when you can't work or don't want to work anymore. And that's a period followed by phase two, which is retirement. And your priorities in these two phases are very different, but many times we see people don't make that shift and they still act like they're in phase one when they really should be acting like they're in phase two.
We're going to talk to you about what we commonly refer to as the second half of the game. And what I mean by that is you're working your entire life towards retirement, and I'm assuming that most of you are, at that age where you're starting to consider some of your options as you move into retirement. And as you do that, you're moving from what we call the accumulation phase of your life, where you're accumulating your assets. Maybe you're participating in your company's 401k, maybe you're contributing to an IRA account or a Roth IRA account or some type of retirement vehicle. And now, as you retire, you're transitioning into the distribution phase, or the part where you're going to need income in retirement. So we're going to talk about some different ways to do that with an emphasis on Social Security.
Hi, and welcome to Financially Speaking with Jeff Bush. My name is Barry Warrenker. I'm the host of today's show. Jeff, lately you've been spending a lot of time talking to your clients and giving them advice on Social Security. So I think today, I know you want to focus on what are some things about Social Security that we know and some of the things about Social Security that we really should know and don't.
Well, hello, Barry, and welcome to the show. It's so great to be here. We're excited about today's show. So much of our practice centers around the Social Security decision. And today we're going to discuss some of the finer points of Social Security, maybe some things that you won't find on the Social Security website.
Well, that's a great idea. Listen, what do they tell us? There's 50 million people turning age 65 over a period of about 18 years since the end of the war, World War II I'm speaking of. And that's a lot of people have this issue, and they've got to make some decisions. And the Social Security, if you go back historically, back in 1935, it was enacted by Congress and President Roosevelt. And up until that point in time, if you didn't have, there was no Social Security. So if you didn't save money and you didn't have a nest egg to live on, and you lost your job or couldn't work anymore, if your family couldn't take care of you, you were just SLO. You were out of luck. And the Social Security Act in 1935 has grown to be this phenomenal business, if you will, or institution that people rely on, but people don't understand a lot of things about it that they really should know. So why don't we kind of start with how there's some acronyms, and the government comes up with these terms. PIA is one that comes up with when it comes to Social Security, which is called the primary insurance amount.
Yep.
And tell us about that.
Well, so of course, Barry, you're right. The Social Security Act was enacted in 1935 by the great President Franklin Delano Roosevelt. I feel like Howard Cosell mentioning the middle name Delano.
Well, you don't want to confuse him with other Franklin Roosevelts that you might know.
In an attempt to limit some of the dangers in modern American life. Can you imagine that? Back in 1935. And of course, one of these dangers is all these acronyms that they throw at you. So anyway, PIA. The PIA stands for the primary insurance amount. The primary insurance amount, this is the amount of your Social Security benefit when you reach your full retirement age. So this is the benefit that you're going to get. And this is a number that you're going to want to become familiar with.
So the full retirement age is, assuming you wait, for most people these days, I think it's age 66.
Well, it's based on
Yeah.
it's based on the year that you were born. So let's just to simplify it for today's discussion, we're going to say that it's 66. If
Okay.
you were born in the 50s, it could be a little bit later than 66. If you were born after 1960, it's 67.
Okay.
So let's just for today, let's just say it was age 66.
Okay, that works. So we have the PIA, which is the primary insurance amount, and the FRA, which is the full retirement age. That's another acronym they throw around. But the one that really confuses people is the AIM.
AIM.
AIM. What is AIM?
Ready, aim, fire. AIM is the averaged indexed monthly earnings. This is the formula used to determine your primary insurance amount, your PIA. So your AIM is used to calculate your PIA at your FRA.
And your aim is to get the most money out of Social Security, and that's the whole ball of wax.
Your
there.
aim is your average index monthly earnings is calculated for you and factors in all of your previous earnings and equates them into today's dollars. So in essence, what they're doing here, Barry, is they're taking an average of your 35 years, your highest 35 years of earnings.
Mm-hmm.
So 35 years ago, when you were, what was 35 years ago? That was like 1980, I guess, or 1979. What they're doing is, of course, what you earned in 1980 is not that the dollar you earned in 1980 is not worth the same as the dollar that you're earning today. So what they do is they index them up for inflation. So they put them all into today's dollars. So they average the 35 years together. Now here's an important point. If there's some zeros in there, say there were some years that you weren't working. Let's say, maybe you left the workforce to have children, or you were disabled, or whatever. There's zeros in there, okay? So those zeros actually factor into the calculation. So if you continue to work, ultimately you're displacing some of those years where there was a zero in there.
And what a lot of people don't realize is when they get those Social Security reports that we get from time to time, they used to mail them to you. I think these days they're available online. They don't mail them out like they used to, but they look at their Social Security report and see, well, this is what I'm going to get if I go at 62. This is what I'll get if I go at 66. This is what I'll get if I retire at 70. They don't really look that hard at the third page of that report, which goes line by line what actually was paid into Social Security from their earnings, all those credits that they earned to calculate that number that you're talking about.
Yep.
And that list of earnings years, is it right? Is it wrong?
Yeah, by the way, you touched on something that I want to expand on here today, and that is that the Social Security Administration, back in 3 or 4 years ago, they stopped mailing the Social Security statements. You used to get them in the mail every year, right around your birthday, and they stopped doing that because it was expensive to mail
sure.
out. Of course, and we're in the electronic age, the internet age. So what I would encourage people to do is just go out onto the government website. We don't have a slide for that, but it's ssa.gov.
Easy enough. Social Security Administration, SSA.
Yeah, ssa.gov, or you can just Google Social Security. But go out there, and there's a you can get your own report. So you just type, they'll ask you for your Social Security number, and they'll ask you some questions, some personal questions, and then you could get your own report and download it. And you should do that because, as you mentioned, Barry, you want to not only see what your numbers are, your PIA, as we just said, your primary insurance amount, but you also want to verify your earnings because there could be some missing years on there, and then if there are, then you want to get those restored and take the steps necessary to make sure that those numbers are accurate.
Yeah, it sounds like there's a lot more to Social Security than most people realize. It would really be nice if there was kind of a report that could give people, I don't know, maybe the 30 or 40 things they really should know, little known facts to help them along the way.
Sure.
Wouldn't it be nice if there was such a report?
Yeah. Well, that's a good segue, Barry. And of course, we're offering a free report today.
Really?
It's called the 40 Little Known Facts and Tips about your Social Security decision, and we're gonna
It must be very expensive for people to buy one of those things.
we're offering it for free
For
today.
free, wow.
In the true spirit of what we do here at Informed Family.
Free information.
Yeah, we're going to offer that free report. So you can call our office. You can send us an email. I think we have a slide that has our email address on it. It's info@informedfamily.com, or just give us a call at the number right there on the screen. There we go. info@informedfamily.com, or give us a call. We'll get that free report out to you. This is important information. This is information that you're not necessarily going to see on a government website.
Right.
You know, this is a little more insight that we like to provide to the people that we work with about Social Security.
You know, it would be really, really good if there was some kind of workshop that people could go to, who are, people that are say approaching age 62 or not in that window where they have to make these decisions. A workshop where they can learn about Social Security from people who really know what they're talking about.
That's a good idea, Barry. And you know what? We have just that.
Are you kidding me?
In fact, we have two seminars coming up, and you see them on your screen here. We're going to be at Lily's on January 21st. That's right here in Pottstown, and we're going to be at Franconia Heritage on February the 11th. And call for tickets if you're interested. And those workshops are going to be exclusive to Social Security.
Yeah, and by the way, if you happen to be seeing this broadcast and maybe it's past those dates, on a regular basis we have these Social Security seminars pretty much every month, sometimes more often than that, and they're in convenient locations to anybody watching this show, that's for sure. So there's always that workshop that's available to you, and it's a free workshop. And you'll learn more about Social Security. Let's talk a little bit about one of the things people think the only decision is, do I take it at 62, or do I take it at 70, or do I take it at my full FRA, full retirement age? Let's talk about that. Why wouldn't someone just go ahead and take it at age 62? It's money, it's sitting there, and they could certainly use it.
Well, that's a question that there's not a simple answer to, Barry. You can take Social Security as early as age 62. So we said earlier in the show that your full retirement age is 66. You can take your benefit as early as 62, or you can delay taking your benefit as late as age 70. There's a significant difference. The difference between taking it at age 70 and taking it at age 62 is 76%.
Wow.
76%. When you factor in all there's inflation, there's cost of living adjustments in there, and the main difference is that if you go past 66, you get what they call delayed earning credits. It's about 8% per year, and if you take it earlier, you get a reduction. So if you take it before you're 66, you get a reduction in your benefit.
So you're saying, say someone who could get benefits at 62, they maybe let's say they're $1,500. Just by waiting, every year they wait, that increases by about 8%, and then if they wait until they're 70, that $1,500 that could be worth $2,700. That's a huge difference if they live a long time. But a lot of people, they say, well, I might be dead when I'm 75.
Well, there's a lot. Now you're getting into a lot of this is ultimately the decision that you're making about Social Security, and this is why we want to help people make an informed decision. Hence the name Informed Family. We try to help people make an informed decision. Making a decision on Social Security is predicated on a lot of things. Your health, right?
Mm-hmm. Sure.
Because if you're only going to live, if you have a pretty short life expectancy, it doesn't really pay you to wait to get your benefit, because you're not going to be getting your benefit for very long.
Well, one of the things that I've seen you do with folks that come in, that, especially when we're talking to someone and really doing an analysis for them, you take a fair amount of time to just generally say, okay, what really are the likelihood of if it's a couple of either one of you being around past 85, 90, or 95, and you look at the averages, and the average life expectancy for a 65-year-old, I believe, is in the neighborhood
About
of 20 years,
22, about
yeah.
21 or 22 years.
And for women, it's a little bit
Yeah.
longer than men, but there's a lot that goes into trying to project out who
Well, there's a
might be
lot
around.
of things you got to look at. You got to look at your current health and longevity. You got to look at your financial circumstances. There may be no other choice but to take the Social Security benefit at 62.
But a lot of
Look at
people, a lot of people assume that they're going to live maybe because their parents lived to be 80, they're only going to live to be 80, or their grandparents only lived to be 75. But I know you spend fair amount of time on that because emotionally we're not really equipped to the idea of imagining ourselves being 90 or 95 years of age. But whether we like it or not, some of us are going to be around that kind of time frame.
Well, that's true. I mean, I would say that in my experience, most people vastly underestimate how long they're going to live. So, yeah, making a Social Security decision, but longevity is just one factor. We want to look at your current financial circumstances. You may be forced to take Social Security because you have no other source of income. Your marital status is important because if one spouse dies, the surviving spouse is going to be left with the larger benefit.
Did I tell you?
The age, your age and the age of your spouse is going to determine factor. There's a lot of things that go into it, Barry.
Well, I had one client say that what he was going to do was he was going to move to this small town he knew about I think it was in Oklahoma somewhere, where he grew up. He says, there's nothing to do in that town. He says, you can move there, 2 weeks will seem like an eternity. So he was trying to stretch his life out that way. But I know you get serious with these people and help them understand what their picture is going to be. Could be 20, 30 years down the road when they may be only thinking 10 or 15 years down the road. So talk a little bit about, a lot of people have said, well, I'm 62 years old. I'd like to work some more, but I want to collect Social Security. So I'm going to not work because Social Security is going to take away half my money. Are people misinformed about that? How does that work?
Well, the way it works when you're 62 and you're getting Social Security, there's a limit to how much you can earn and not having it affect your Social Security benefit. So right now it's $15,480. So just say $15,000. So if you earn over that, for every dollar that you earn over that amount, or I should say for every $2 you earn over that, the Social Security benefit is reduced by $1.
Okay, now let's talk about that. So someone's sitting there saying, "Oh, geez, if I work, I'm going to make $40,000 a year, but I'm making $25,000 over what Social Security allows me to do. I'm giving back half my money. Why would I work? What would be the benefit?"
Well, that's an extreme example, and if you're going to be making $40,000, we would not advise you to take Social Security. But let's say you run into a job situation where you're going to make $16,000 or $17,000. Then what happens is, and this is kind of one of the big misunderstandings about Social Security, and that is people feel that you lose that benefit, and you really don't lose it. What happens is they do reduce your benefit, but then what happens when you turn 66, the Social Security Administration goes through and looks at these credits that you forfeited, and they actually go back and recalculate your benefit, and you end up getting that money back.
And it's a good point that you're making, because what a lot of people don't realize is they can collect the Social Security. They can work if you like your job, or you just want to work, or you need something to do, or for whatever reason. Don't make it based on losing Social Security, because actually they're kind of doing you a favor if you think about it, Because if you're working, you won't need the money as much. If you're working, you're going to be in a higher tax bracket, chances are, than you will be. Let's say when you turn 66 or older, and you really do retire, or now you're getting credits for the money you didn't take, and it's rolled up.
Yeah, ultimately, you're going to get a higher benefit if you do work and you start earning over that $15,000 threshold. It ultimately will be credited back to you. One other point I want to make with that, Barry, and that is that in the year that you reach your full retirement age, so 66, the number jumps up to 41,000. So it's a substantial difference, 41,400. So
just for that year.
Just for that year. So if your birthday is in September and your full retirement age is 66, between January and September, you can earn $41,000 and not have it affect your Social Security benefit. And then, of course, once you reach your full retirement age, there's no limit. You can earn as much as you want, and it doesn't affect your Social Security benefit.
Well, it sounds like, and it's obviously true, that there's a lot more to Social Security than most people realize. And this is probably one of the biggest decisions that people will make in their financial lives. It's as big as almost anything you can think of. Whether to invest the money in going to college, whether to buy this house or that house, how to refinance, whether to take this job or that job. I mean, this is a big decision, and yet I find so many people get to a certain age, where 62, people are talking about, they see their friends collecting, and they make a decision based on, well, my brother-in-law said it's a good idea. Or, well, I didn't want to lose the money, Social Security might be going out of business. I mean, there's a million reasons that people can justify because they want the money now. And we're human beings. We always like getting things now, not waiting for them. But here's a case where you really need to sit down and crunch some numbers and ask some very thoughtful questions about what you want your life to look like. And it's a big decision, and it's something that we're glad to, at least our clients, obviously, we help them in a very comprehensive way to build a retirement plan. But this report that you had referenced earlier, that the 40 little-known facts and tips about your Social Security decision, I mean, that's something that everybody should have, and we're happy to provide it.
Yeah, a couple things. Making the Social Security decision is a big decision, and I always tell people that it's like managing an asset. It's like managing a big asset. Like, I'm talking about an asset that's about $600,000.
Wow.
A big asset. Yeah, because when you look at the amount of income that you're getting from Social Security, I mean, it's just like it's like managing a pretty big account. So you want to you can't just make a Social Security decision in a vacuum without considering all the other factors. Because once you make the decision, it is hard to unwind. I mean, they do have an escape hatch where within a year you can pay back your benefit and start all over again. But you're right. So today we're offering a free report. It's called 40 Little Known Facts and Tips About Your Social Security Decision. So call our office, send me an email, and we'll get this free report out to you. And then the other thing that we do, Barry, is in addition to this report, and of course we do our public workshops, we will actually run a customized report for anybody who wants one, which basically analyzes all the data. So all you do is give us your Social Security statement, and we'll actually run.
Well, there's a critical thing that we also need when we do that report, and that is the report asks, how long do you expect to live? And that's a question I think people kind of trip up on, because if they put in too low a number and it's really not realistic, and they're going to, with their profile, that they're more likely to live to be 90 or 95 than they are to die at 70 or 75, that's a big decision. So what the report will tell them is, if you have what you perceive as to be a normal lifespan, this is what you get. If you happen to be lucky enough or unlucky enough to live 5 years longer, well, this is what your future might look like. And if you're unlucky enough to go 5 years before that, so it's going to give you a range of options that you wouldn't normally have any idea you had.
Right. Well, so that's right. So we put all those factors into this report that we do. But beyond that, um, the first thing is you want to become educated. So the 40 little known facts and tips about your Social Security decision. It's a nice report where you can get more information than you would normally get on the government website. That's one thing. Another thing is we have public workshops. We go out and we do, we offer these Social Security workshops free to the public. So if you want to come, we have the upcoming dates listed on your screen. Just give our office a call for tickets. You can order up to 4 tickets. We have a nice 90-minute presentation. So we have a couple dates coming up that you might want to be interested in attending one of our workshops. And then, to take it one step further, and of course we usually have a consultation first, but in our consultation, we will, as a result of the consultation, we'll offer a customized Social Security report. We'll actually go through and, based on your statement and, a couple pertinent questions, like you said, life expectancy. We want to, find out sort of what some of the longer range goals are, because we can't just say, okay, well, here's all the data. This is what you should do with regards to your Social Security, because there's a lot more to it than just that. You have to look at your desire to work, your ability to work, where you're going to get your other income from. There's a whole variety of factors that play into it. So on the surface, to a lot of people, it seems like making this decision on when to take your Social Security is a pretty easy and straightforward decision. But it's really not, because there's so much that factors into it that, there's so much misinformation. And of course, it's a government program, so the government always tends to make things very complicated, very complicated. So we're going to put a wrap on today's show. Barry, I think we're just beginning to scratch the surface on Social Security, so we're probably going to have stay tuned for future shows where we're probably going to talk a little bit more on some of these important factors that you're faced with regarding Social Security. But for now, we're going to offer a free report. And until next time, we'll see you here at Financially Speaking with Jeff Bush.